So, good evening, everybody. Good afternoon. Good morning, anywhere you are in the world. We want to look at some analysis, a quick update on the chart, where we are and where we are going. All right. As we do it every time, what we look at is checking the pairs from higher time frame perspective. We see what is given. From there, we bring it down to smaller time frame. All right. So you can see this pair now on the weekly time frame. Can you see the beautiful structure channel that I've spotted on weekly time frame? All right. I've spotted this on weekly time frame. This upper trend line is the resistance line. Right. Okay. And the down trend line is the support trend line. You can see whenever the market hit the support, it turns back. Whenever I hit it, make a lower low, it turns back. Here, it has not made a lower low, all right? It has not made a lower low here. There's possibility of the market coming to either make a lower low or make a pullback and proceed to the upside. Okay, but this is the pattern that we're able to spot on the bigger time frame. All right. We go to daily, take it back to daily. You can see that we are not concerned with the whole chart. We are just analyzing the small part of the chart, all right, where action is right now. You see, on smaller time frame like daily, after bringing it to daily, we have spotted this channel. See this rising channel? Can you see from here to here? Okay, this market now has broken this channel on the daily. It has broken into the downside. Can you see? And after breaking into the downside, it's now forming a correction. And you know, I told you severally that markets love to make impulse and correction. Impulse, correction can either be like this and break down for continuation, or you see impulse, correction will be like this and break down for continuation, or you see impulse, or you see coming, or you see impulse, all right, or you see impulse this way, you see impulse this way, and then correction will be this way, and this pattern will break to the upside. Can you see now? So in this case, if this is scenario 1, this is scenario 2, and this is scenario 3, what scenario is now playing out? This is the scenario what? Scenario 2 is the one playing out. You already see impulse and you are seeing correction like this. So where should it go? To break down to the downside. So that's what we have spotted on the daily time frame. Okay. So if we have spotted this on the daily time frame, we need to go back to 4 hours so that we can see the structure clearer. Okay. You can see the way we are doing it step by step. Go to 4 hours, and each of the time frame we go, we see something that is different from the other time frame. Can you see here? You can see the impulse and correction. Very clean here. Very clean. I have my pending order already here. Why do I have the pending order there? Because I understand that market moves in impulse and correction. So we have spotted this as the end of the upward move, and there is a breakdown of this trend line. After the trend line breaks down, what are we having next? We are having a sideways corrective structure here. After this sideways corrective structure, it's very certain that the market is going to break down. And when it's breaking down, it's going to break down very fast, like this one. You are likely to have the length of this impulse. You are likely going to have it here, because this formation that is that we are seeing here is what is called zigzag. Okay, zigzag corrective structure. All right, zigzag corrective structure. It makes impulse, correction, and continuation. And the length, and if this is A, this is B wave, and this is C wave. The length of A is almost equal to the length of C. So we should be rest assured that we are going to have this market breakdown to this level. That's NZD card. All right. So you can place your pending order on NZD card at you can place your pending order at you can place it here, somewhere here at 885. I place it at 0.8590, 0.8590, 0.8590, and then put your stop loss 8590. Can put your stop loss. Your stop loss is too big, so if you don't want to put your stop loss above the flag, which is 86, let's say 8700, stop loss 8700, that's 110 pips. All right. If you don't want to have a 110 pips stop loss, let me now tell you what you do. What you do in order to avoid having big stop loss in this kind of scenario is to have to leave the market to break down to the downside. After the market break down to the downside, you now wait to have a correction. All right, you wait to have a correction, just small correction like this. All right, just little correction like this. Then the market will break down to the downside. In that case, you are no longer putting your stop loss here. You are putting your stop loss here. Your stop loss can be like just 30 pips instead of 110 or 120 pips. Okay, so that's how you do it. All right, so that is NZD card. NZD card. Now let's check Bitcoin. I spotted a beautiful setup in Bitcoin, BTC USD. Beautiful setup with Bitcoin. Yes. So let's go to daily and see what's happening. Daily. See what's happening. Can see the structure. The same thing. You keep on repeating these structures day by day, and you see they keep on repeating themselves in the market. All right. See the structure that we have identified on a daily time frame. You have this structure beautifully spotted. You see impulse and you see correction. Okay, see impulse, it's a rally to the upside, and all these are corrective structure. Okay, so we want to see whether this corrective structure is breaking out, because it's supposed to break out to the upside. We want to see whether it's breaking out to the upside or it's coming down one more time. So what will give us that confirmation is by going back to smaller time frame. Let's go back to 4 hours. Okay, let's go back to 4 hours. Can you see? This is a counter trend line that we have drawn. I told you that market moves in impulse and correction. Impulse and correction. And this is how you capitalize on those impulse and correction. You see here, impulse, 3-wave move, correction, counter trend line break, buy. All right, you made a rally up, another correction, counter trend line, buy. See another rally, but when it gets to this top upper channel, you can see that in every one here, it has been making correction like this, correction down, correction down. But this scenario, what does it do? Up, and it make what? Correction up. What signal is it giving you? It's going to break to the downside. I have always shown this pattern in this channel. I've always shown it. There's no way you have this pattern that the market will not break down to the downside. That's exactly what you have seen here. Can you see? All right. Can you see? Impulse, and it's now weaving to the upside. This is a pattern. It's a reversal pattern that shows you that this market is going to break to the downside. And now, after breaking to the downside, what do we see? Let's go to 1 hour and see this pattern that is created. Can you see? After breaking down to the downside, it's now giving us a triangular pattern. Okay, you should know by now that there are three types of corrective structure. That number one, you have a flat. Number two, you have a zigzag. And then number three, you have a triangle. Okay, what is a corrective structure? A corrective structure is a link between two impulses. That is, if you have impulse like this and you are having a triangle, all right, in between, then you must have a continuation. So this is A wave, this is B wave, and this is C wave. This is exactly what you're having here. You already have impulse, you are having a triangle in the middle. After the breakdown of this triangle, you must have the C wave, A, B, and C. All right. So in this scenario, we are not having flat, we are not having a zigzag, but we are having a triangle as the corrective structure that will serve as a link between this impulse and the next impulse, which is called continuation impulse. All right. So if I were you, I will place a pending order on Bitcoin at somewhere around, let me spot it and let you know. I'm going to place pending order on Bitcoin at, let's see, I'm going to place it at 8545 pending order. Sell stop order on BTC USD 8545, and where are we going to target as TP? Okay, because we know that this impulse that you have here, we are likely going to have equal length here. So we are going to target 7979 as our TP. TP for Bitcoin, 7979. 7979. Set stop 8545, and TP 7979 for Bitcoin. Okay, let's move. You have AUD JPY. AUD JPY and see the beautiful structure. I tell you, there's no magic in trading. All right, we know it's probabilistic. That's why we put our stop loss. Each trade we place, we must put our stop loss. If there's changes in market condition, it's not going to affect us in a great deal, and we are not going to risk much. I'm going to dedicate a day to teach everybody on how to watch risk management when we take our trade, risk management. So now let's go. If you see daily time frame on AUD JPY, you see the structure that we have here. Can you see? The analysis is a daily routine. It's the same thing we do every day. You see, it's the same thing we do every day. It has reached the upper channel here and it's breaking down to the downside. But if you look at it on 4 hours, right? Look at it on 4 hours, you can see it. It's very clear. It's very what? It's very clear. You can see it's breaking down. It's forming a consistent lower low, lower high, lower low, lower high, lower low, lower high. And since you have seen that in its bigger time frame, this particular pair is bearish and is likely going to sell down to this trend line here. Likely going to sell down to this trend line before we can hope for it to break this trend line and continue to go to the downside. So now what do? You take it to 1 hour and let's see the beautiful pattern it's been forming. Can you see how I've been capitalizing on this pattern, to get some few pips? Can you see impulse, correction? Let me show it. Let me annotate and show you clearly. Can you see? When we spotted the downtrend, you see impulse, you see correction. See another impulse, you sell here, put stop loss here. You see another correction, counter trend line, break. Impulse, you see correction again. Impulse, you see correction again. Impulse. Each of these impulse, you are selling. Like now, I gave a sell at this level. Sell, because why? The correction has hit this trend line and the correction is over. So the next thing for us to do is to sell to the downside. Okay, so as soon as we break this support area, we are going to move our trade to break even. All right, we move our trade to break even and watch this market flush to the downside. That is AUD JPY. All right, AUD JPY. Now let's check gold, or let's check NZD JPY first. NZD JPY, and then we check GJ before we check gold. Same thing, I've shown you the same thing. You can see it has broken the trend line. It has broken the trend line. Oh, sorry. Can you see? It has broken the trend line. And after breaking the trend line, it's now forming a consistent lower low, lower high, lower low, lower high, and it's forming another lower low again. So if you have not entered a trade into like in this setup, if you have not entered sell, you can't join at this level. Why? Because it just barely broke support, so it has gone far. See where it started the journey, it has gone far. You have to wait, let it break very well, let it break very well. If it break very well, and it will definitely give you a correction. It cannot just go like that forever. It will give you another opportunity. So when it gives you another correction, what do? You now pick a sell from that level to the downside. All right, put your stop loss above here. So that's how you approach your trading. Okay, let's just check GBP JPY before we check gold. All right, GBP JPY before we check gold. Right. So as far as I'm concerned, for GBP JPY, it has this beautiful pattern, okay? But ultimately, GBP JPY will definitely break to the downside, because we have been able to spot a beautiful flat corrective structure on daily and 4 hours time frame. A beautiful flat corrective structure, okay? If you look at it, here you have impulse. Already have impulse here. Okay. After this impulse, you have this correction. All right. You have a 3-wave pullback. Okay. After the 3-wave pullback, you have another, move to the downside, and then you have a beautiful 3-wave to the upside. Okay, and here it barely broke the low, and here it barely broke the high. This is what is called a regular flat. All right, this is what we call a regular flat. It's a beautiful structure, and after the completion of a regular flat, we expect a movement to the downside of the magnitude of the initial impulse. That's what we expect for GBP JPY. Okay, we expect it to break to 139 area before we can expect any reversal to the upside. This is clearly theoretical. This is textbook analysis, guys. Before we expect a break to the upside. So at this level, what should we expect? Okay, what should we expect? Let's go to smaller time frame, like 1 hour, to see what is happening. Let's see 1 hour to see what is happening. All right, so you can see, let me do some cleanup so that the structure can look clearer for us. So as far as I'm concerned, I want to sell GBP JPY only when this structure is broken. Okay, only when this structure, this pattern is broken. That is when I will love to sell GBP JPY. That's when I will be sure that it's no longer going to the upside. Because why do I say so? It is possible for this pair to make this structure to come down to this place, all right, hit this trend line, and then proceed to the upside. It's possible. Come and tag this high again. Can you see? So we just have to be reactive. Come and tag this high again. So instead of us undergoing that stress, why don't we wait? Let it break this structure to the downside. Once it breaks this structure to the downside, then you can get a small correction to pull back from back to the trend line, and then we now prepare for a move to the downside to tag this low. All right, to tag this low. That is the setup on GBP JPY. Just watch. It's going to happen the way I have told you. All right, it's going to happen the way I have told you. Now we have to look at gold to see what gold is doing. We have to look at gold right now. Let's look. I give a trade on gold. Okay, gold is going to break down, guys. Gold is going to break down. Let's do a clean analysis on gold on daily, 4 hours rather. Gold has given us a beautiful corrective structure that we call a running flat. Okay, beautiful corrective structure we call running flat. See the impulse. Okay, after the impulse, it now made a correction in 3 waves with A here, then with B here. All right, and then you have the wave C. The wave C here. All right, wave C here. So you can see. Let me label it so that we can get it clearer. A, B, C. Okay. A, B, and C. Okay, this is a running flat because it's slightly broke the high before it moved to the downside. Okay, this is a running flat. Now let's go to 1 hour so that this structure can be a little more clearer. Okay, we have anticipated this move. I analyzed gold sometimes and I said we want a move to the upside. Okay, so that it will break this high. If you break this high, you form a running flat. From there, you can look for a breakdown to the downside. Then if you look at this counter trend line, it's already broken to the downside. Okay, what does it tell you? There's momentum to the downside. Okay, there's momentum to the downside. All right, so because this one is already broken to the downside, all we are looking for now is a breakdown of corrective structure in order to put a sell order. All right, we want a breakdown of this structure. Now we pick a trade here, then there was a sudden shift of momentum, but that is not to say that my bias for gold is not bearish. It is what? Bearish. Let's see what structure, what pattern is going to create along this line. It will make this structure, it will make this pattern come like this, come like this, come like this. All right, give you this beautiful pattern and then hit this area and then boom to the downside. All right, that is good for you. So just watch. Let's watch what's going to happen in this along that trend line. Let's see what is going to happen. Just leave it for now because as it is now, it has a bullish outlook. Overall, the overall picture is bearish, but at the moment it has a bullish outlook. So it's untouchable now. It is not. You can't place a trade now on this one because it can move back. If it moves back to the trend line, all right, if it moves back to the trend line and break this top like this, then we begin to change our, break this top like this, we begin to change our bias, make a bigger structure here, then we go for long on gold. All right, we go for long on gold. Okay. Okay, so now, so it's very important anytime we are trading, we should learn how to break even our trade. Of course, breaking even trade is part of trade management. If you don't know how to break even, you can't, there's no way you can manage your trade well. Okay, now, here, assuming now you have a set up here, look at it here. You have beautiful impulse, you have a 3-wave corrective structure here. What is the next expectation? I told you if you have impulse, you have a 3-wave pullback with A, with B, with C. You have continuation to the downside. Okay, this is the same thing we have here. So we put our sell order here and it activated. Okay, look at, we have sold from here to here. Are we not in profit? This is profit. All right. But now, immediately we move down, what do we do? This is where we put our stop loss before. We will now remove this stop loss here. We clean it off from our MT4 and we'll come and place it into profit here. We place it into profit there. All right. You place it, you remove it from there, and then so you put it from, you remove it from here and you put it into profit here. So you can see. So what is the essence of doing that? That's what I want to tell you now. What is the essence of doing that? The essence of removing your stop loss here and come and put it into profit here is that, look at this movement. You expected this one to go down, but it refused to go. And instead, what do you have? All right, upside. Can you see? Upside. Do you get it now? Do you see it now? So why this shift of momentum is going to the upside? What happened? Immediately the market get to this level, it will take you out in profit, in small profit. But if you did not move your stop loss, right? If you did not move your stop loss from this level that it was before, where you are risking 1% of your account, if you did not clean it up and put it here where you are into small profit, what happened? This market will have come, remove all your profit you have gathered here, remove it, come over here and come and hit your stop loss. You now be wondering that I gave you a trade and that trade or somebody gave you a trade, or you spotted a trade and the trade was in profit, but you just went to do something, and by the time you came back, the trade is already in red. Can you see? It's already in red. Why? Because when you were in profit, you did not break even your trade. Okay? There are some volatile pairs that you just need to break even because they can shift direction at any moment. They are too volatile. And gold is an example. GBP JPY is an example. GBP USD is an example. If you move 15 minutes, 15 pips into profit, if you are a day trader, break even. If you are a swing trader, if you have 50 pips into profit or 100 pips into profit, break even. All right? That's the way to go. So that is the concept of break even, and we must apply it in every pair that we are trading. All right? So let me see if we can still analyze one more pair. One more pair. All right? Let me see if we can check NZD card. We check NZD card. Correct. This is NZD card. See it? I told you market moves in impulse and correction. You see the way I'm drawing my channel? See the way I'm drawing it? Can you see it? Beautiful. All right? Beautiful. Just master the art. You will get it. Impulse. Three-way pullback, correction. Boom. Three-way pullback. Boom. Correct. Complex corrective structure. What are you having next? Boom. That's it. That's it. I'm already in the sell of this NZD card. I'm selling from top here, and I place a pending order, a sell stop order here to activate me to the downside again. All right, I want it to activate and move me to the downside. Why did I do that? Because in a bigger time frame, you have this market to still move to the downside. Can you see? To move, want it to move to the downside. It's like we have analyzed it before, because I saw we put a horizontal line. Want it to move to the downside, and I've earlier given a pending order on this pair. Put a pending order on this pair. Okay, put a pending order. All right. So USD card. Lastly, USD card. USD card. Okay. All right. The breakout that we had the other time was a fake breakout, but I think we are going to input our pending order. We can put pending order on USD card on 3090. pending card, pending order, buy stop, USD card 3090, 1.3090, 1.3090 pending order. Why? Because on a higher time frame, on a daily, you have this beautiful structure. Okay, can you see? You have this beautiful structure on this time frame. Can you see? Crystal clear. Okay, and here you have this beautiful structure again. Can you see? So you can see the way it's moving. Impulse, correction, impulse, correction, impulse. Then we expect it to move to the upside. And if you have to analyze this pair based on wave analysis, you will see that it's very clear. All these are impulse, then you have correction. Then you have a reversal impulse here. After this reversal impulse, this small one, you are having a corrective structure which will break out to the upside. This is not less than 200 pips trade. So put your pending order there. You can just put your stop loss below the flag and target the high here. It's a swing trade idea. All right. So that is USD card. The buy is not negotiable. It's not likely it's going to test down. It's going to go because it's having a sideways corrective structure. Take it to 1 hour, you see it clearly. It's having a sideways corrective structure. So it's not likely. Can you see? It's having a sideways corrective structure. So we expect a breakout. No breakout, no trade. And even when there's breakout, we must ensure that the breakouts close before we take a trade. All right. So that's it. That's the update from me this evening. And do well by subscribing to my channel. This will be uploaded to YouTube. Right? Do well to subscribe the channel if you derive some benefit from the free content. And with that, you also encourage me to do more. All right, and do remember to click the notification bell so that each time I upload the content, you can get to see it as soon as possible. All right, thanks for watching and thanks for coming. Thanks for subscribing too. Good night, everybody. Wish you well. Bye. Bye.